Olá, boa tarde a todos.
Hello, good afternoon, everyone. It's an enormous pleasure taking part in another edition of IBDT's International Forum, 8th edition, sponsored by the Instituto Brasileiro de Direito Tributário and the University of São Paulo Law School. The panel that I will share, and it's an honor, the object is the theme, present questions concerning transfer price of the developing countries. Before introducing the members of this panel, I would like to thank the invitation to be the chair of this panel. Luiz Eduardo Schwerer invited me, and also thank Professor Ricardo Marias Oliveira for the opportunity to be here in this panel. I think it's an honor, a pleasure being here with people that are the exponent of the academia that will be in this panel of the 8th Forum with new paradigms of international situation, COVID-19. Specifically, we emphasize we have the present themes that are in the developing countries, and it's very important for, and also concerning the presence as a member of the OECD. So we are talking about transfer pricing, and presently I introduce the participants of this panel. The lecturers are the moderators, and I'll introduce the order of the presentation. Professor Silvia Muñoz, Legal Master in Taxation at Georgetown University in Washington, and also postgraduate in Spain and IBSD. And he's reading the resume. So,
e, como eu disse, é professora de Direito Tributário do Programa de Mestrado em Tributação de Política Fiscal da Universidade de Lima. O nosso segundo painelista...
So the CVs are being read of all the panelists. Victor Polizelli,
coordenador do curso de pós-graduação Lato Sensu em Direito Tributário Internacional do IBDT, sendo também diretor de
Brasília.
financeiro e tributário pela Faculdade de Direito da Universidade de São Paulo.
He's reading the resume of Victor Polizelli. The third panelist, Cláudia Pimentel, also reading the resume, and she's Brazilian.
Substituta, coordenadora do nosso conhecido COSIT, da Secretaria da Receita Federal do Brasil, representante do Brasil no Fórum de Práticas Danosas e no Fórum de Procedimentos Amigáveis no âmbito da OCDE. Além disso, a Cláudia, sem dúvida nenhuma, tem um título adicional que eu vou me permitir dar a ela, que é a nossa precursora de uma nova fase do relacionamento entre fisco e contribuinte nesse país, uma fase do diálogo.
So I am adding that she's contributing a lot, looking for convergence of interest of the excise and of taxpayer doing some work, noble work on this subject. The fourth panelist, Professor Victor Matchekhin, reading the resume. He's from Moscow, and he's professor at Kutafin, Moscow State Law University. The moderator is the colleague Andrés Ramirez. Also, the resume is being read. Andrés will be the moderator of the panel, Andrés Ramirez. He's from Brazil. And of course, all of them will present questions and food for thought about the present issues concerning transfer price in the developing countries. After these considerations, I will pass the floor to our first panelist, asking the panelists that observe the time, not more than 15 minutes of presentation in order to have, with the coordination of Andres, the moderation and debates and discussions. Andres will also present to the panelists the questions presented by the audience. Thank you very much. And with that, I pass the floor to Professor Silvia Muñoz.
Thank you very much. Thank you for the invitation to this important event. I'm trying to share. Okay. Transfer pricing and the impact of significant losses in fiscal year 2020, Peruvian perspective. Well, nowadays, there is no doubt that COVID-19 has severely impacted business, individuals, and countries in general, causing a deep economic crisis worldwide. According to recent estimations carried out by the IMF and the World Bank, by the end of this year, the GDP of Latin America will be around -7 and -0.4. In Peru, the second trimester of this year has shown even more depressing figures, -30 drop in the GDP, expecting -15 drop by the end of the year. The dramatic decrease in the Peruvian economy is a fact that anticipates some consequences that are unprecedented in the last 50 years, among others, the overwhelming losses suffered by both Peruvian and other companies abroad. What are the immediate effects on transfer pricing? The first is a careful review of how the comparability analysis will be carried out and on the relevance of comparable with losses. A usual practice of the Peruvian administration and economic advisors has been the automatic rejection of comparable that shows financial losses. The question here in debate is the tax administration should accept or not loss-making as a determinant factor in assessing compliance with the arm's length principle. The Peruvian tax court has interpreted in several relevant cases that the mere fact that a company has generated losses in a specific operation does not mean that this operation has violated the arm's length principle, indirectly confirming that a company that does not obtain a profit margin can, even in those circumstances, meet set market value standard. Under this understanding, in general terms, the status of comparable companies will depend on the functional analysis carried out and not whether there are losses, recurring losses, or extreme results that are identified in a specific fiscal year. Comparable with losses should not be excluded, and of course, during this year will be the rule. Now, assuming a post-COVID-19 scenario, how good the comparability analysis will be carried out? And this question leads us to a more difficult problem: comparability adjustments. How to compare a Peruvian company in the COVID context, operating in a macroeconomic environment with a drop in GDP at least at -15%, when the said drop will not necessarily be experienced in other markets where potential foreign comparables operate. Firstly, we must mention that the comparables used in transfer pricing analysis in Peru are mostly, almost 95% foreign. The evident lack of local local public information has forced the tax authorities, as well as the private sector, to resort to comparable public information from markets abroad. According to the income tax Article 32A, that is the article that rules the transfer pricing regime in the country, the Peruvian regime accepts the comparability adjustments only if they are expected to increase the reliability of the results. The Income Tax Act states expressly that when for purposes of determining comparable transactions, local information is not available, taxpayers may use information from foreign companies as long as they make the necessary adjustments to reflect the difference in the markets. Notwithstanding the foregoing, the Peruvian statutory law does not contain any legal provision on how to make a geographical market adjustment that allows to equalize, standardize the information from the tested party in Peru and the comparable set, foreign comparable set. What types of adjustments will be required to compare these situations in the COVID context? Next year, application of coefficients, factors that reflect macroeconomic changes, factors that reflect changes by production sectors. The Peruvian Tax Authority has been very reluctant in these years to accept comparability adjustments proposed by the taxpayers. Actually, the taxpayers has used to propose geographical market adjustments, but these geographical adjustments have been rejected by the tax administration. The tax administration has only accepted usual adjustments at working capital and receivables. In a recent resolution issued by the tax court also has rejected comparability adjustments for accounting differences. Even though the tax court recurred to the toolkit for addressing difficulties in accessing comparables data for transfer prices and analysis, that is a very well-known document issued by the OECD jointly with the World Bank, the IMF, and United Nations, the tax court has rejected a simple adjustments on difference in the accounting. That was the case. The mining trader had entered into hedge transactions in order to protect the exports from the fluctuation in the price of mining ore. The taxpayer recorded its derivatives according IFRS 9. The transfer pricing adjustment consisted in eliminating temporary differences in accounting because the comparable set used the hedge accounting and deferred the results of the derivatives. The tax court rejected this simple adjustment in differences in accounting. So the scenario for from the Peruvian perspective is very difficult. The law accepts the comparability adjustments in order to reflect similarities or try to equalize different markets, but we don't have a statutory provision that is specific, provide a specific rule and how to do it. Another important topic here in relation with the problem that the COVID has caused is the multi-annual analysis. We have the comparability analysis using multi-annual information, especially in cases where the transactional net margin method is used. According to our Income Tax Act regulations, the use of information of the taxpayer and the comparable operations corresponding to 2 or more fiscal years before or after the assessed fiscal year may be taken into consideration if that information is useful to understand the origin of losses, or the case when the taxpayer is using losses originated in fiscal years, in previous fiscal years. It is clear that in the context of COVID-19, the use of multi-annual analysis will be mandatory in Peru. In this example, that is a real example, that shows the practice in recent years regarding the use of multi-annual information, the tax administration compared the average of net margins of 3 different years, 2011, 2012, and 2013, in the side of the comparables, versus the net margin of 1 year, 2013, the fiscal assessed year, in the tested party, that it was the taxpayer. Regarding this procedure, 3 by 1, that is known by that means, the tax court has already indicated, oh my God, that this analysis should be discarded because it's not congruent. You cannot compare the average of 3 years from the side of the comparables against 1 year on the side of the tested party. The tax court has suggested in this resolution that the comparison should be considering 3 years. So, taking into account this rule approved in our regulation, we expect that for the fiscal year 2020, multi-annual analysis should be considered in order to formulate transfer pricing analysis in, for example, the T&M method. The taxpayers and the tax administration should consider the average net margin of the tested party versus the average net margin of the comparables of at least 3 years, including 2020, in order to properly capture the downturn on the economy in this year. If this procedure is accepted, considering the need for contemporary information and documentation, an important practical issue arises. When would this information be available to taxpayers, to the companies that prepare the information in the databases? If information for future years, for example, 2021 is required, 2020 income tax return in Peru should be provisional. This is an important practical issue that is not answered yet. So far, this is an unregulated aspect, and we are waiting for the next responses that we are assuming the OECD is evaluating in order to issue recommendations in the context of COVID-19 and transfer pricing. These are 2 aspects, or at least 3 aspects, that I wanted to share with you. Thank you very much.
Muito obrigado, professora Silvia, por sua explanação. Eu passo a palavra agora
Thank you, Professor Silvia. Now I pass the floor to Professor Victor Polizelli.
Muito obrigado, Durval, pessoa a quem eu agradeço aqui.
I thank you.
Agradeço aqui a organização pelo convite, pela oportunidade de participar.
I thank for the opportunity to be here in this panel. I thank the organization via your person. And so here we discuss a theme that is maybe, we do not have many answers to these questions. We are concerned mainly when it refers to transfer pricing. And Professor Silvia, thank you for your cooperation. And I've selected a theme, and I have an ebook on it. It's available for the participants of this forum. and it is compensating secondary adjustments in the Brazilian TP practice related to the alignment of transfer pricing. And compensating secondary adjustments. Okay. This theme affects Brazil, although it's not regulated, and it affects Brazil and involves exactly the conciliation of the price with the other country. So let us say, comparing the Brazilian price and the other country's price. And so specifically, we deal with this issue, temporal problems. See, it's a question that's very complicated, how to solve the comparables. And it's a very special year, 2020, and the daily affairs, it happens. Imagine 2019, I do an analysis of the stage and we conclude concerning the prices that we considered would be practiced in 2020, but we had to reorganize the method, the ENM, because many times they do the analysis of the transfer prices before the year starts. So it's a method of pricing. So if you compare to the 2 years before, in 2019, what you had, the point of view concerning 17 and 18, and this analysis that we've done over 2 years, we have a certain curve concerning price and the parameters linking us to the prices that were used. It's an analysis very simple. This price is not so simple to get. It's not so constant. If you're a Brazilian, you consider the exchange market, so the exchange rate of the currencies. So you have to adjust yourself to the situation. And it's followed by analysis that are done via the modifications of the transfer pricings. And so in the first semester of 2020, we have data concerning 2019, and the conclusion is between 2018 and 19, there was a drop of the comparables in a certain industry, and so the arm length correct for 2020. Is it true? So we have to consider and do some adjustments. Of course, the adjustments after 2020, because sometimes the comparable analysis is done post phase after presenting the income tax revenue. And so, and the theme varies. So in this case, it's explaining, it's very common what's happening because you have the possibility of doing adjustments. That's the case of the United States. So it's a practice that's very current when it's documented commercially. And so we have dual point of view here, an analysis that's done after fact, and it's linked to knowledge of factors of 2020. There's a possibility of data being manipulated in the comparable. Of course, people may not accept it. Some countries like it, some countries don't. It's not the case of Brazil. Brazil, in fact, we do not have exactly this model. Brazil, the test is done after fact. We don't have adjustment model, but we may receive an adjustment, the end of year adjustments, considering Brazil as the receiver. So importation, for instance, and the company, parent company said that it was wrong, the calculation was wrong, and it was expected that there was some alignment in the Brazilian practice here with the parent company and the sub company. So having the same value in both sides, let us say, in this case, it would generate an adjustment, a compensation with a compensation, financial compensation, not only in terms of tax, but it generates also the payment of some value to Brazil. So how it would be do, the possibility of adjustments in both countries. Is it possible in two countries? What's the nature of the payment? Is it a kind of devolution? It's an additional thing concerning prices. So would be the issuing of an invoice, a credit note. Would it be necessary to modify the operation? Let's say the taxes on added value, the VAT? Would we have changes in the credits, input in the credits? And so the conclusion that they got is that the correct value was $80. So in this case, it was from 100 to 80. So there is a modification. This is an issue that you have to consider. The entrepreneurs have to consider that example in case of the adjustment of prices in Brazil and the point of view of other countries. And in the legislation that we have transactions with other countries. And the end of the year adjustment is a practice that is very popular. And the year-end adjustment is just to correct the price that was changed over the years. I'll talk a little bit about the secondary adjustments with the time I have. So I'll talk about the secondaries now, a specific type of adjustment. It's important to consider the Brazilian legislation concerning that. And so you consider that you have auditing in a country of the sub-company. Of course, it's primary and secondary adjustment. In Brazil, it will be primary. So if you consider that Brazil is a subsidiary company, and Brazil per se considers that the price was high, and so the Brazilian company paid 100 to a company abroad, and the additional 20 payment. What does it represent? The nature of it. Some countries, the issue is that the additional 20 were not dividends, they were payments, not dividends paid abroad. So can you imagine, is it a loan? Is it a loan in this case? Or is it a capital stock alteration? Let us say you have a net worth reduction. In case of dividends, you have taxation at source. And so can you have it? In the future, yes, especially now. We're discussing in Brazil the possibility of doing it in a process that we're having some pressure concerning the net payment from the part of the tax payment. So the rate would be considered. If we have a loan in this case, the 20 paid, okay, so you have fines, you have interest rate, and of course you have other added value, VATs, and normally the countries that have this type of legislation, they consider the possibility of the parent company giving the 20 back, because if there is no position staying with it there, so you have to agree that 80 is the right one, so the currency would go back to Brazil, the 20. So it would be considered dividend, and the payment would be done at source. Brazil does not have income tax considered on dividends. Maybe if we are a subsidiary in this case, there is not the qualification as loan. In Brazil, the qualification is a reduction of the PL. So that's the Brazilian specific regulation. And it is, from the point of view of accounting, the company can do that only concerning taxation. So it will decrease the base of the interest on profit, the rate during the fiscal year. And so concerning the parent company, you have many combinations. A company that has excess of profit according to arm's length principle. Of course, it brings problems because Brazil, as other countries, do not follow the arm's length principle, only when it refers the favorable situation concerning taxation. So in this case, so we have the adjustment of the price if the country that subsidiary or the sub-company will not decrease the revenue. So we cannot consider the profit will be decreased. So in that case, you have difficulties to frame it. Let us say if you have a payment that you have income tax held at source, and you cannot compensate that in Brazil. Normally, it is a way to consider what's dividend. Dividend is phenomena that is dwelt in the company's statute, so it's the constitution of the company. If it is commercial law, for instance, you have to acknowledge that in Brazil. Just to wrap up to adjustments, compensation. So we have situations where the agreement itself between companies says that the transfer price is considered price calculated according to the increase of the tariffs. So in that case, the transfer price. So imagine if the company, the subsidiary is in Brazil, the sub-companies in Brazil, the conclusion they will have that the 20 are considered extra. So in that case, it says that the price will be based on transfer price. So it's subject to a condition that is singular, and the obtention of the transfer price is the adjustment of the documents because the agreement says that the price is to be determined. And we are used to see that in companies' operations, in trades. So in that case, it generates the accumulation of the 20 that we have as an adjustment. So you have the adjustment, a global adjustment, the payment of a lump sum, and this payment can be presented in an invoice, but it's more difficult because, let us say, if it's considered possible, giving back the price, normally it's in a credit note or credit bill. So the practice of the companies in Brazil, we issue an invoice to receive it as a service. So there is taxation on service. So in that case, exportation of services, is it right or wrong? Does it make sense or not? We have to align it with other prices, but it adds taxation. We have more taxation paid because there was the return of the 20. So why did it happen? Because the parent company permits to do this transaction. Sometimes a Brazilian company receives this demand from the parent company. The other company decides it. So it has to be adjusted there, abroad. So considering the price refund from the point of view of income tax, legal companies, it's not taxed because the cost was not considered. It was, in fact, the problem with the IVA. In fact, it may generate a taxed operation. In Brazil, we have the case of HP and a recent one of Nokia This theme is in discussion, and the two cases, the agreement foresees that the transfer price previously determined. So the program that was mentioned was the lack of adjustments to invoices in HP. So a commercial document was prepared. In the case of Nokia, there was a refund higher than TP adjustment. That's the discussion. Obviously, they used the method of transfer of the other country, so it was higher than the adjustment that was done in Brazil. Just to wrap up, I will present another possibility that was explained, a solution of a consultation done by COSID. If the situation of the price is present or depends on a future condition, let us say, concerning the operations at port that is done with adjustments for the considered future adjustments. So it's at customs. So in this case, the customs permit that in our legislation. So if you do the rectification of the importation or the statement of importation, so it was paid with a higher price. So maybe it will generate a payment, back payment, a refunding. And there will be, in this case, a fine. And so this is a price that is considered provisory price. So it shouldn't be the method to be used. And of course, it's a solution that we had in our system that was orientation of OECD, and it can be regulated freely. So Brazil can permit that without any fine. And in the case of VAT, I would consider, does it make sense to change the operation of our VATs in case of an importation that would be with a higher value? Let us say 180. So you have the VATs on it. But anyway, this VAT that was paid in importation has already been used in the company, so it decreases the IVA in the posterior phase. So it's not a case of refund. The orientation is paying concerning the VAT because the income was used. It's a neutral situation. It's the same when the importation price is smaller, so the intention of paying and using the operation without any modification. I thank you, Durval, for the opportunity to pay.
Thank you, Victor. Your explanation was very interesting. Now I pass the floor to Cláudia. Cláudia, please take the floor. Good afternoon. Good afternoon. I'm so pleased to be part of this Congress by IBDT. I would like to thank the invitation made by Professor Luis Flávio, and also I would like to thank the praise by Walter, but I must recognize the merit of the inland revenue that for many years, we're searching for changing the posture, searching for a better dialogue with the taxpayers. Well, with this, we will address now the subject. This panel specifically, it's focused on developing countries. So I chose a subject to address the fixed method, which is commodities method. And also, this is the subject of an article I wrote in partnership with two peers from the Inland Revenue, also undergraduates of IBDT, even Daniel Prates and Ivo Damascus. And it is quite clear why this method, the sixth method, is so important for developing countries, because the their economy depends on commodities and exports. Andrés, do you have my presentation? So, is it available? So, well, if this economy depends on exports, and this is reflected on taxation. Taxation of this sector, of course, will represent an important share regarding revenues of these countries. And Brazil is part of this group, and let's say one of the biggest producers of commodities chosen. If you see the Brazilian trade balance, you clearly see transactions that these products that can be soybean, iron ore, amongst others. But nevertheless, this kind of market or sector, we notice that expressive share of international trade is done between companies of the same group. And then prices might be or might not reflect if it was independent parties. So then the transfer pricing rules have an important role. The problem noticed in the sector is the under voice invoicing and triangular structure, and especially with intermediary companies in low taxation areas, countries, or most of transactions of export in Brazil of commodities is made through triangular transactions. And studies published, they indicate that for soybeans, the percentage made through triangular transactions is 90% or even more, being that intermediary countries where we have the intermediary company, Cayman Islands, Switzerland, Austrians, and Virgin Islands, amongst others. With this, we see developing countries having a problem. They have headed by Argentina introducing the sixth method in 033. Then many countries, including Peru, very momentum to it's a momentum to have someone from Peru in this panel that will address some comments in this area. But and the Argentinian rule, when it was established, it set forth that it would use the importing prices in stock exchange, but commodities price transactions would use the intermediary abroad, and the intermediary would not present economic substance. And Brazil was adopted the sixth method as of 2012, and we created two methods, the PCI for imports and PSEX for exports of commodities. And there are studies by CIT published saying that those countries that adopted the sixth method, they had positive outcomes, especially during the initial phase as soon as adopted. And I present you some data that was published by the study, which is the case of Brazil and spontaneous adjustments we had in 2011, 12. Those are those years we don't have the obligatority of the sixth method. And we have spontaneous adjustments in this percentage of for imports 12.8 million, and then 012, 2.3 million. In 013 mandatory, it had a leap to 73.2 million. Exports, it was even higher. It was in the house of million. And so what happens? It is noticed the differences in countries that throughout time tax legislation faces difficulties because the legislation ends by having some gaps, making frail the benefits arising from the sixth method. Therefore, the article, what does it do? The one we wrote, I mean. We know this method is not uniformly adopted by the countries. There are some variations. So taking into account some differences and some elements, we did an assessment to compare. And here I bring the nature of the measure as one of the elements. We have these countries adopting these measures or adopting an anti-abusive rule, being that further transactions are subject to the normal transfer pricing, or we have those countries that the general employment of commodities as the exchange rate variation, regardless of being compared. So some countries develop the sixth method exclusively to reach those situations of abuse, like intermediary used in transactions like the Argentinian model. In Peru, what we notice is more as the cup variation, CUP, and they can use a distinct method of cup for some commodities transaction. But of course, in this case, it has to communicate the tax administration due to financial, economic, and technical conditions for the utilization of this other methodology, and why and justify it did not use the CUP, cup. Brazil's legislation, and I put two slashes because in our view it does not follow any, neither one nor the other line, because it's not restricted to abusive situation and it's not characterized by the variation of cup because it's a mandatory method. Therefore, regardless of the situation, you must use the method when you're subject to transfer pricing and transactions with commodities. What happened is that in Brazil's legislation, it was established this method because of the excessive use of cap, cost plus method, excessive use. So we didn't have the commodity, we used the cost plus and fixed margin of 15%, low for most of the commodities. It ended by being inadequate to use it. So the next aspect we analyzed was the measure scope. And here you have two variations. You can have a wider scope, any transaction carried out with commodities with quotation disclosed by the market or stock exchange, a transparent market. And it can include assets with prices or index published by government agencies, and wider scope. And there are more restrictive one, which is the proposal by the PEPS project report, using a definition of commodities is more specific, and it receives a qualifier in a way that includes those products where quotation is used as reference by the sector to fix prices and transactions between parties not related. Not just being a commodity, it must be subject to the in quotation in stock exchange, and the quotation must be used as the basis for non-related parties to specify their transactions. And then we see Qatar, Brazil adopt this line, and Ukraine also the wider approach. Both countries use it. So there is in this broader way, broader line, you can see for Brazil, it's sufficient for the product to be considered as commodity and public prices in order that it can apply the sixth method. And you can generate problems as an example when you have a quotation that does not correspond to the prices effective in transactions within independent parties. So this can happen if I have a public prices, there's no netability in this market. So the price is not does not reflect well the market price. It might even have, but it's not used for giving prices during transactions of independent parties. Therefore, to avoid this, it would be important in the scenario where we don't have available price or the price does not reflect market conditions of low, let's say low volume of transactions, either the export producer sector does not use this quotation as the reference for the price. It would be interesting to use a reference price as a reference price, the price practiced during transactions amongst independent parties. And it seems that this is the model, this is the one adopted by Colombia and Ukraine. This is what we noticed in our article. Well, the last point that we analyzed, in fact, we analyzed more in the article, but the last one I will address here today is quotation date. This is an element that has huge relevance and can bring frail aspects regarding the establishment of the quotation data to compare the value, because prices might vary a lot throughout a timeline. Countries, they adopt different criteria to set forth the date of quotation for the calculation of the fixed method. So those countries that privilege objective criterion, seeing that the shipping date, so the quotation regardless the date of the transaction, but it's the shipping date, or those periods close to the shipping date. Normally, these rules, they are earmarked to avoid abuse. So does not want to leave it open the price that the company will adopt. The other option is the use of the price fixing date, i.e. the date per se of the transaction, which is an approach that was advocated by the BEPS project report. The report points out that the important point is the date and period used by the parties to specify the transaction. Depending on the commodity, prices fixation amongst independent parties can be done based on specific date quotation, or even a formula might be applied taking into account several quotations through a timeline. So the object of this report, when you adopt this line, is to uphold the arm's length principle, where the taxpayer can present reliable proof showing that the date was fixed, taking into account the behavior of that date to fix the price of the commodity. And then it says the evidence showed and supplied by the taxpayer is not reliable. The taxpayer is not consistent in the evidence it's submitted, so it uses the shipping date. In fact, when you use just the shipping date, you might have problems of double taxation or double non-taxation. But on the other hand, but if you think about it, if you leave the date of fixing the price, this is more susceptible for handling, because this document is supplied 1 year later. So this ends by opening the doors for any or conditions or prices to be handled in a way that the quotation is more, it presents more advantage for the companies. In Argentina, it requires that contracts for exports transaction by related parties to be recorded within the tax administrations of previous to the shipping. So we analyze Colombia, Peru, and Ukraine. They also demand this to be complied. The date model, it shows as an option, interesting to mention, because it elects as date the shipping date. Now, if the company shows with reliable proof the pricing date, then it authorizes to use the pricing date, and then more aligned with the arm's length principle. Brazil, in fact, follows the line of the other countries adopting the transaction date. If not possible, then we use the shipping date. Concluding regarding the sixth method is one that in fact aims to be objective by the administration. If you use the market quotation is objective criteria and you evade all these debates I mentioned about complexity, which the enforcement of or use of transfer pricing and arm's length principle. Therefore, it's interesting. And on the other hand, in spite of having the potential of protecting the taxable basis, and it gives a situation for taxpayers to identify some difficulties and frail points regarding the gaps on this legislation, and and you can improve in order to guarantee security legally wise and inhibit abusive scenarios. With this, I pass the floor to Andrés. I hope I was within the given time. Thank you very much.
Cláudia, thank you very much. It was perfect concerning time and your presentation. Before presenting the floor to the next panelist, I referred Professor Silvia Muñoz, present legal manager. She's the former legal manager of that institution. Now she is an independent attorney at law. So Andrés called my attention to that. Now I pass the floor to Professor Matchekhin.
Thank you.
Victor
Hello. First of all, many thanks for inviting me to participate in this event. And I remember a wonderful time in São Paulo 2 years ago at the similar Congresso. And today I'm talking about transfer pricing. And let's move to the next slide, please. Generally, I will talk about Russia and the region. And first, Russia. Well, we have transfer pricing. Historically, we spent many years as a country working with state-controlled prices, and still we feel that, well, transfer pricing is a little bit new animal here. And we tried to introduce transfer pricing 3 times. 2 times failed. Now we are in a third attempt. Looks like it works. First attempts failed mostly because we don't have enough information, comparables. Now somehow we are ready to work with different databases, and almost 10 years we try to survive with these new transfer pricing rules, which are mainly based on OECD concepts. But OECD documents directly are not treated as law in Russia. So we have pretty heavy legislation, and legislation on transfer pricing in Russia, it is law, tax codes. Now in the tax code there are about 50 pages of law, and some people thought that it would be a good idea to have such detailed law and not very short law, as in some countries where there is just arm's length principle, like two sentences. Well, from certainty perspective, it looks like it's not very good idea, because this wording is not very consistent, and when there are changes in environment and we need to change anything, it's very difficult to change these 50 pages. So it is difficult. We have a lot of instructions and letters from fiscal authorities, mostly from finance ministry. Almost all this stuff is available in Russian legal databases. There are many questions from taxpayers. litigation. Well, there are two different things. First of all, it is possible to litigate transfer pricing assessment as well as any tax assessment in Russia. All court decisions are publicly available, so it is pretty transparent procedure. But last almost decade in Russia, tax authorities are trying to change their position in respect of litigation, trying to reduce tax litigation as much as possible, trying to close issues at the time of tax audit or at time of internal appeals within tax service office. And as a result of it, a number of tax litigation is going down. And from transfer pricing perspective, we have maybe just 5 court cases on tax litigation. Not because we don't have much tax assessments or tax audits on transfer pricing. No, there are plenty of them. But somehow tax authorities and the tax office, the federal tax office, solve the issues. And basic idea of the tax authorities, not just to send assessment to a taxpayer. Idea is that taxpayer should accept idea of this, let's say reassessment, and it should do it by himself. So somehow it works, but as a result we have just a few tax cases. Our judges are not very deep in the concept of transfer pricing, and it's very unlikely that we will receive something like court concept developed by high courts in respect of transfer pricing. So the majority of this life is within tax administration, not within court system. APAs are available, and companies use this opportunity to sign APA with the authorities. All of them are confidential, so there is no much information, publicly available information about them. But well, different industries use these opportunities, and a number of APAs are growing in Russia. Apart from these transfer pricing agreements, taxpayers, they have general right to participate in so-called horizontal monitoring program, when tax authorities just have direct access to the data of the taxpayers. And as a result of this, it is impossible to penalize taxpayers because they are transparent. And many taxpayers like this opportunity to demonstrate everything to the tax guys, reducing the risks of tax assessment. It's not legally, it is not linked to transfer pricing, and there is a question mark. Well, whether if you are in a horizontal monitoring, well, you're just absolutely safe from transfer pricing assessment. And some companies use horizontal monitoring program and also transfer pricing APA opportunities. Maps, Russian maps are not great. Historically, also we did not develop map practice in our finance ministry. Maybe there are just a few cases for many years when Russia accepted map idea. So they will almost no exist in Russia. Currently, OECD is pressing us to be more active in this field, but still, on one hand, capacity of finance ministry, which is responsible for maps, well, it's not great. So there are just no enough people, and no enough people with relevant experience. And also, there is no real conceptual understanding in Russia how map should work. From our legal perspective, it's very difficult to explain if you read tax treaty well, why we should, well, agree something different from the Russian tax code with a non-resident. So conceptually, we are still trying to develop something helping us to go forward with maps, including transfer pricing. So it is still an open question. In Russia, it's also interesting for you to know that transfer pricing lives in two lives. First life is traditional. We are talking about at this conference, OECD stuff. But at the same time, when taxpayers are manipulating prices, tax authorities can use GAR instead, saying that, well, you see, it's price manipulation. Let's just ignore them, and tax assessment will be a little bit different. And tax authorities can use this route. Mostly, it is done not in respect of big business. It is typically for, let's say, for medium business. But well, in our tax culture, well, when you say transfer pricing, you should just add whether it's formal transfer pricing or something broader. There is special tax administration, tax office responsible for transfer pricing, and only this administration can start tax audit in the country. So to some extent, it provides consistency from tax authorities' perspective. In Russia, we feel, as colleagues at this conference say, that, well, transfer pricing is not becoming more certain. And we feel that, well, even in our short history of transfer pricing, it is probably becoming more complicated. And historically, tax authorities try to press taxpayers to use the first method. Now it looks like method number 4 is a more popular method in Russia, because there is no available data for the assessment, and it is very difficult to assess what will happen in the current situation when with this COVID era. And for us, if you look back, our transfer pricing is pretty new, and we of course experienced some economic crises in our history, but mostly it was before we introduced this new transfer pricing rule. So probably currently it will be first real challenge for our transfer pricing, how it will work within COVID crisis situation. We as a country, we would expect simple solutions rather than complicated solutions. And I will illustrate it by a couple of non-transfer pricing things currently going on. First one, CFC rules. We have the CFC rules. Complicated, difficult, and currently authorities are thinking about option for taxpayers instead of heavy reporting obligations and calculations. Just give opportunity for a taxpayer, for a Russian person to pay 5 million rubles, and this will be fixed price, fixed amount if you have CFC companies. So annual payment 5 million, well, full stop. Wait for next year. Maybe again you decide not to calculate all your profits for your companies and declare them and face a risk of reassessment of the tax authorities. Just simple approach, fixed amount, full stop. And the second example is what Russia is doing currently with its tax treaties. It's very interesting thing. So we see this MLI things and PPT, wording, but we feel that also it will be difficult for us. And what Russia just started recently, we are contacting our tax treaty partners, saying that, well, guys, let's increase rates in tax treaties in respect of interest and dividend up to 15%. And not all countries are contacted, but there are typical victims: Cyprus, Luxembourg, Malta. We contacted these countries, and all of them accepted our proposal, because proposal was accept increase in tax, or we will terminate treaties. After some considerations, these three countries agreed with the idea, well, to have treaty with these increased rates. At the moment, there are negotiations with the Netherlands, absolutely about the same thing, about increase of taxes, and there are rumors that Singapore and maybe Switzerland also will join the suit. It is just example that, well, we need simple solutions, and it's not clear what may be simple solution for transfer pricing at the moment. But right now it is extremely complicated, and we don't see any perspective that it will be easier in the future. Next slide, please. Let's look at the region. Well, in Russia, well, you see, we have wonderful neighbors. All of them were part of all Soviet Union, and from tax perspective, our neighbors typically follow Russia in all new things. And if you introduce transfer pricing, well, in a couple of years, our neighbors also go there. The same story with BEPS, CFCs, and other stuff. So basically, our neighbors have the same instruments as we have, but you may see from the slide that there are some differences. So there are something common in introducing transfer pricing rules in our countries. For example, we all do not treat OECD documents as something obligatory as a law. But when we are thinking about details, well, our neighbors are trying to modify something. We are with our neighbors, with some of our neighbors in a new economic union. It is Eurasian Economic Union. It is equivalent of EU, a light version. So we just started our economic cooperation, but we are at early stage, and there is no common understanding of taxation in respect of direct taxes. So mostly it is customs and VAT cooperation, and logically there is no rules or no plans to introduce rules in respect of transfer pricing. So probably our transfer pricing systems will go further without a real coordination. And next slide, please. At this slide also you may see that, well, there is something common in our tax TP policy, but also there are many differences here. So differences and problems, well, we see that they're almost the same. And basically it's what I wanted to present to you in respect of TP development in our region. Thank you.
Obrigado, Victor. Com isso, nós encerramos a apresentação dos nossos...
Thank you, Victor. With this, we wrap up the presentation of our panelists. And Andreas, I pass you the floor to coordinate the debates. I see we have several questions, and very interesting, by the way. And the floor is yours, Andreas. Thank you very much, Durval, and the opportunity to be part of this event, IBDT, and I'm very honored to be part of this panel. Well, I think the first thing we have to notice based on the questions posed, and we have to mention based on Brazil's context, is that compatibility amongst OECD proposal regarding the adoption of these standards and safe harbors with fixed margins of today with principles of arm's length. If this is, we could see this with the remarks by Silvia, the context of COVID-19 and the sad realities of our comparables today are different than what it was said in the past. So, Victor, place your comments first, and then Cláudia.
Obrigado, Andrés. De fato,
To Andrés, in fact, interesting points. One is safe harbor. I will comment this mix with Silvia's presentation. For a long time, I used to say that, and I thought transfer pricing was not international tax law. It's national rules. The excise of each country keeping its own tax basis, and it's unthinkable. This situation explained by Silvia after COVID-19, when a company analyzed comparables, all are experiencing losses and taxes. Courts will not understand that adjustments are possible. So everything that Silvia mentioned after 1 year of COVID, and so many markets, they have more profits. Food sector, it's the same, if not better. So when I talk about this, Silvia, I know a company that in fact is bad. Competitors are clearly going bad. How can I not evidence this through the transfer pricing with comparables? And then talking about safe harbors, Brazilians, we like the fixed margins. And so one of the issues using fixed margins at COVID, we will have taxation also. The Brazilian legislation saying that there was profit when all the companies did not have profit. So is this international tax law? No, it's Brazilian rule. In our country, I think it's a bit easier. And what we are talking about methods that are chosen, elected by the taxpayer. It's, let's say, taxation of the contract. So they are certain of this way. So don't, if you made the choice, don't complain. It's a presumed profit. You might be in loss, but you chose this method. So Silvia, please, and then Andrés, you could also talk. I would like Silvia to hear what you have to say. As a curiosity, in Peru, the transfer pricing analysis is ex-stricta, or regarding to 20 comparables are before to 2020, and to bring the 2020 multi-annual analysis possible, or could you do in Peru an analysis for 2020 with the status of 2220? And I don't know if it is not allowed. I would like to know, how does it work, Silvia, please?
I will try to do my best because I'm not fluent in Portuguese, but fortunately, I think I understood everything quite well. Well, Peru approved the transfer pricing regulation in 2004. It's a very, I think, complete regime, very OECD approach. And the transfer pricing analysis used contemporaneous documentation and information. And according to the tax regulations, the use of information from previous years or future years in a multi-annual analysis is only possible in few cases. One of those cases are when the taxpayer faces financial losses. In that case, the taxpayer should use, the taxpayer and the tax administration, information from previous years or future years in order to prepare the local file, the master file, or the master file, no? Because the CBC has another characteristics. And considering that, we understand, because I don't know, and I think we don't have experience with taxpayers using information from future fiscal years. But that will be the case, I think, for this fiscal year, 2020, or maybe 2021. The use of information in, according to your explanation, would be ex ante. But in this case of a multi-annual analysis, you have to file a provisional income tax return, and then to have the possibility to amend that that income tax return. And that situation takes us to another problem, because if you amend the income tax here in Peru, and in the amendment of the income tax return, you determine a higher tax, you are subject to a tax penalty. So it's a crucial moment where, from the Peruvian perspective, you note that the statutory tax provisions are not logic. So we are expecting, I don't know, in the future months, a formal declaration from the Minister of Finance in order to face this situation. We expect at least the deferral of the formal obligations for Peruvian taxpayers corresponding to the 2020 fiscal year. Regularly, the local report has to be filed in the month of June. June 2021, the taxpayers have to file the local report corresponding to 2020. And I am sure that by the end of May of next year, most of companies that formulate the local report, economists, tax firms, and even the tax administration maybe don't have the information. Next year will be a very difficult year in order to recollect that kind of information and to face the situation, the economic situation of the companies.
Obrigado, Silvia. Se a Cláudia tiver então alguns comentários sobre a pergunta.
Thank you, Silvia. Cláudia, would you like to say something about the previous question? Thank you very much, Andrés. While Silvia was mentioning, I was thinking about the same thing that Victor Polizelli mentioned. Well, at least over there, they have the chance to look comparables. Going to be difficult due to COVID, but they can look for comparables to show that they did not have that profit. We have fixed margins. So using those methods, of course, that the company is not obliged to use that method. It can resort to other different methods. If they can use CUP, good, but in this case, it would not be possible. And then fixed margins, they bring this outcome. Now, as for safe harbor, it's important to say, and I'd like to mention that acceptable, well, I'm out of COVID. COVID is something out of the normal, but safe harbors, the way we want to draw in the project, we did the research, the idea of having comparables. We don't need safe harbor. It's a sector that will have the easiness. But there are some complexities at play. But with the comparables, you have the possibility of having a method that is more fit. That's why safe harbor is important. If we notice we're using those scenarios without comparables, even though, and has to be well designed and data, robust data in order to assess if it's possible to design it like this. Now I pass the floor, Andrés. Thank you, Cláudia. Now, the wide experience of Professor Matchekhin that he presented to us, Victor, in the context of Russia, how would it work, this dynamics regarding price or transfer price adjustment according to COVID, knowing that the system in Russia is quite strict regarding the legislation being so full, complete between brackets, and in face of this novelty of system compared to other countries. Professor Victor, you have the floor.
That I need at least a couple of words about your introduction, because I understand what Silvia told, and I missed almost everything other colleagues discussed. But as I understand, there was discussion about this current situation about filings and opportunities to change tax declarations, tax reports, and somehow it is linked to safe harbor things. In Russia, historically, first things we introduced in our transfer pricing from very beginning, safe harbors, and there were pretty high limits for safe harbors. And then authorities reduced this corridor and finally decided not to have any safe harbors in Russia. So authorities don't like safe harbor here, and currently we don't have them. But if I look at it from cynical perspective, as the most popular method in Russia, it's method number 4, and there are margins. Well, in reality, business knows some margins, and they understand what margins are aggressive and what are not aggressive. So in reality, there is something like safe harbors here. Speaking about Silvia's point about what's going on with reporting in the lack of proper database, I think that in developing countries, maybe we just need to understand experience of developed countries, because for them, they live with transfer pricing life for many years, and they saw many periods of dramatic changes in prices and periods when business and its profitability is going down. So this somehow should work, and probably it worked in other countries. We need just to find proper experience and not to invite something new from 0 point here. So also, I would like to add, looking at name of our event, Novas Paradigmas Congress. I think that basically we may in this turbulent time think about something very new in respect of transfer pricing things, and maybe this OECD initiative, Action 1, Pillar 1. You see, my colleagues in Russia think that probably there is a new baby related to transfer pricing in this pillar, and maybe there will be a solution for many problems we are discussing right now. And from certainty perspective, also maybe we need something like this. Global approach and allocation formulas at the moment, probably direct arm's length assessment and allocation of profits. They're ready to compare them. Maybe it's the right time to do this. That's all from me. Thanks.
Obrigado, professor. Eu vou deixar a palavra com o Victor.
Thank you, professor. I pass the floor to Victor now. talking about the sixth method addressed by Cláudia, and also to do a connection with the sixth method and her article. It's very interesting. And I had a feeling that analyzed country, Argentina, Peru, Ukraine, the sixth method involves also an ex-ante analysis and involves the needs of some countries, if I'm not mistaken, Argentina, to file the method like we do with the spread here, with the record of spread saying beforehand what you're going to do before starting the year. Why this is important? Because to know if the shipping date, the contract date, and the day, specific date at the stock exchange and commodities price, they vary from the morning to evening. Many times, prices in the morning are different from the afternoon. So Brazil would head towards something that will make taxpayers to make this choice beforehand or afterwards. It's a central subject. The Brazilian way of doing transfer pricing. So if we head towards something different from this and looking the reality of facts, so perhaps we will file the sixth method beforehand. Victor, in fact, analyzing other countries, the conclusion that we reach, because it also requires the record of prices and conditions of transactions before shipping date. So, ex-ante. But if you think well about it, ex ante is more in line than the independent parties would do, because these parties, they will specify with the information they have, and the transaction is happening, therefore will specify with the information they have. Therefore, it seems to me that ex ante has this line which is more adherent when you think about the independent parties. But perhaps if you analyze, we talk about the sixth method, it seems that it makes sense to do ex ante. But perhaps you have TMMN where you have a net margin, and then you can have some sort of concern, and in this issue of a later adjustment of the net margin. What I can say in terms of project, we're analyzing it. This is a point that's being analyzed. And what we notice, and I mentioned yesterday during the event, today, in spite of our legislation seems ex post, in fact, it is many times done ex ante, because pricing is taking into account methods and it takes into account a less adjustment. If you see transaction by transaction, is ex ante, in fact. So it seems to me to be analyzed as ex post. Of course, it seems the preference goes to ex ante, but we are analyzing. Thank you very much. Thank you, Cláudia. Panelists, thank you very much. Time is due for this panel. I pass the floor to the president or the chair to wrap up the floor. Thank you, Andres, and all the panelists of this panel. No doubt we had a very interesting panel. Silvia brought us several aspects and complexities regarding the impact of the pandemic within the context of the certain of adjustments regarding transfer pricing in Peru, and all aspects that end by impacting the jurisdictions that have the same Peruvian method. Victor brought an interesting element, which is asymmetry of transfer pricing of other rules of other countries compared to Brazil, that's still fully based on fixed margins. Cláudia did an interesting approach regarding Our sixth method, PCE-P6, specifically designed to address a domestic product very important, which are general commodities, especially in our agribusiness sector and other sectors also. And Professor Matchekhin also brought us interesting points regarding the development of transfer pricing rules in Russia and other countries surrounding Russia. Andres was an excellent moderator, and he caught the main questions posed by the attendees. Before wrapping up our panel, perhaps I did not hold myself back, and I would like to make clear that we could all reflect on, wouldn't it be the case? So could we think and reflect within the context of the Inland Revenue proposed this questionnaire? Its deadline was extended, it's underway, and within our whole context and to review our rules regarding the scope of OECD, and this is food for thought. Wouldn't it be a good safe harbor for all of us that our new method could, yes, take into account the possibility of adopting safe harbors in a way that it's optional, at least during a transition time where taxpayers could experiment this new arm's length environment by OECD and adjusting with time. So this is food for thought. Unfortunately, we cannot address now because we have reached the time is due, but this is for the next opportunity. And it's a positive thing to think about surrounding the subject, to bring a bit the view a bit different regarding what can be development in this rich process we're going to experience until the final adjustment of transfer pricing rules adjustment. Thank you. It was a pleasure to chair this panel. Now we have new representatives of our academia, profession, and the daily affairs of our tax law lives. Thank you very much. Remain safe within the pandemic context. Thank you.